Good morning, traders. Welcome to another edition of Technical Talk with me, Aaron Hill, one of the market analysts here at FP Markets. Time is now 8:38 London time or 7:38 GMT. And with that, let's take a look at where we are on the technical charts in early London hours. Again, we'll be focusing on the major currency pairs, the euro dollar, Aussie dollar, dollar yen and pound dollar. We'll also take a look at the US dollar index, which is simply the value of the dollar relative to a basket of 6 foreign currencies. Note that Europe's single currency carries the greatest weight at 57.6%, I believe. Okay, with that, let's head over to the euro dollar. So as you can see on the euro dollar, this is the weekly time frame. We are now entering prime support at 1473, 1583. And as you can see, there are also a bunch of Fibonacci ratios at around the upper edge here. One in particular is the 100% Fibonacci projection, and that comes in at 1613. For any harmonic traders present, they will note that this is actually a AB equals CD formation. Now we are seeing a mild reaction here. Whether this will amount to anything is difficult to tell at this point. However, this is a key area on the longer term chart. Also, do note there were likely long-term stops beneath this these lows here. I'll just have to get my crosshairs on to find the exact low around the 1612 September 21st lows. There were likely some long-term stops below here. So with sell stops being tripped at this point, larger players may look to come in to buy into that selling momentum. As we head down to the daily time frame, as you can see, we did recently take out the Quasimodo support at 1689. Now this was a key level. And now we have room, according to this time frame, to move towards Fibonacci support at, I believe this comes in around, I'll have to switch my charts down, around the 1421 to the, it's there, 1420, 1522. This is a key area to be mindful of and could, it could signal that we are heading lower within this prime support on the weekly time frame before we see any reaction. Now, moving over to the shorter term charts, this is the H4 time frame. This is the H1 time frame. We are bouncing off a Quasimodo support at 1563 on the H4. Whether this has enough energy to break yesterday's session high, I believe it was at 1610. Is difficult to tell at this point, but ultimately we are looking at this resistance at 1622. This is, and do bear in mind, this is a previous Quasimodo support level, and given that there's no obvious supply here, this is a if we do reach this high, this is a very high probability resistance level. Now, with that, looking down to the H4 time frame, as you can see, we are bouncing off the H4 Quasimodo support, as I just said, it's 1563. But if we do get back up to the 116 handle, keep an eye on the local Quasimodo resistance at 1605. A whipsaw above stops at the 116 level could be something to watch out for, and could draw in sellers to reach, ultimately targeting the daily Fibonacci support, which I just mentioned. Now, moving over to the Aussie dollar, we are also in prime support at 69, 68, 70 to 42. Now, as you can see, there's not really much buying interest being seen from this area right now. We did have a short spurt of interest to the upside on the heading later into August, but we did top out around the 74.85-ish area, and since then we've not really seen much from the buyers. Now, this could have something to do with the daily time frame, showing that there's room to move lower. Again, very similar to the euro dollar. We have Fibonacci support at 70.56, 71.26. Now, we could test this area before we see any buying interest emerge from the prime support on the weekly time frame. Now, moving over to the H4 timeframe, we have just recently reacted from resistance at, as you can see, 72.23. This was a key level because of the support. The level was served well as support through into late August and through late September. So a reaction was highly likely from this zone. As for downside targets from this area, we're looking at the Quasimodo support at 71.44, which does actually converge with a deep 88.6% Fibonacci retracement. So this is certainly something to look for. And we also, I believe, there may be a Fibonacci convergence there with the 100%. So also something to look out for is the 100% Fibonacci projection at 71.18. So we might get a dip into this area as well. Okay, going down to the H1 timeframe, as you can see, we have recently reacted from a Fibonacci resistance. Now, this was a really interesting area. It comprised of a 100%, I believe it. Oh, sorry, it's 1.27% Fibonacci projection at 72.44, a 1.618% Fibonacci expansion, as well as a 61.8% Fibonacci retracement, as you can see, at 72.57. We have reacted from that, and now we are testing the round number 72. Should we break through this round number? It's highly likely we are going to break recent lows and head for the Quasimodo support mentioned on the H4 timeframe at 71.44, and then potentially heading to the daily Fibonacci support. Just on one note, as you can see, this H4 Fibonacci 100% Fibonacci projection at 71.18 does actually converge nicely with the Fibonacci support on the daily time frame. Kicking over to the dollar yen. Now we've got something really interesting happening on this time frame right now. As you can see, we did have a really strong reaction from the weekly demand area at 108.40, 109.41, and that lifted price enough to come within striking distance of key supply at 113.81, 112.22. Now, what's interesting on the daily time frame, we can see a 1.618. I believe this is a Fibonacci expansion at 112.05, reacted to the pip. And with that, we snapped a six-day bullish phase and are now testing support at 111.11. And this is a support which was a previous Quasimodo resistance level. As you can see, we are reacting off this level. Now, what's interesting is with this daily support, we also have on the H4 timeframe a small H4 decision point at 110.93, 111.03, also circling this area, and with that a supply turn demand at 110.99, 110.79. On top of this, we also have the 111 figure on the H1 timeframe, and that coincides with a 38.2% Fibonacci retracement at 110.95. What also caught my eye, and I mentioned this, I believe, in yesterday's daily market analysis, was the stops likely below the 29th of September lows at 111.21. Now, tripping these stops below here would have likely fueled a sell-off, as you can see it has done, a mild sell-off, should I say, into this area. Now, as I said, there is convergence around the 111 handle, which is likely, if we test this area, this will be somewhere we likely see dip buyers emerge from, given the convergence with daily support at 111 and also the H4 zones. Okay, with that, on the pound dollar, So from the weekly time frame, we can see we had a double top form at 42.41. Now this is a long-term pattern with the neckline coming in. I believe it's around the 36.70 level. We have broken that. We broke that in mid-August. Now, with that, supply turn demand has recently also come under pressure at 36.29, 34.56. Now, given that there's an absence of buying around this area, and we've closed below the neckline of the double top pattern, there's a huge chance, not a huge chance. It's likely we are heading now for the double top profit target, and that comes in, I believe, around the 31 handle. So we could see further selling on the pound according to the weekly time frame. Now this is technically confirmed on the daily time frame. We have a lack of, this for me is consumed demand. As you can see, as price was rallying, we did spike lower to collect any unfilled orders, and for me this is pretty much weak demand at this point, and we see a clear run to a Fibonacci cluster, which is between 31.21 and around 31.65-ish. This is a high probability area of Fibonacci ratios, and what's even more impressive is it converges closely with the double top profit target on the weekly time frame. So do be aware of this. So long term on the pound, I am looking at lower prices. So it would be a sell on rally scenario. Now, as we head over to the H4 time frame, this decision point really caught my eye yesterday at 35.54, 35.19. Now, as you can see, it is set beneath resistance at 35.70, and we also have a trend line resistance coming in from the high 39.13. What's interesting with this decision point is it's set just above the round number 135, and I've applied that on the H1 timeframe. Now, knowing this, there could be another whipsaw above this round number going forward, and we could drive into this H4 decision point. Now, above here, as we all know, round numbers do contain a lot of interest, and by extension, a lot of orders. And there will be breakout buying interest above here, as well as protective stop loss orders from traders looking to fade the round number. So a whipsaw above this area into this decision point could be something to watch out for. Alternatively, if we whipsaw below the decision point at 34.00, 34.32 on the H1 time frame, do be aware that we could whipsaw straight into this H4 Quasimodo support at 33.80. This could tempt players to buy into any those stops. However, given the longer term picture is focused on the downside right now, any upside may be limited. And finally, let's kick over to the US dollar index. This is a real quick one. This is a real quick chart. We are seeing some resistance. We did recently reach 1-year highs at 94.50, and the RSI, the relative strength index, is now in overbought territory. Alongside this, we also have a 1.272% Fibonacci projection in play at 94.40, alongside a 38.2% long-term Fibonacci retracement at 94.45. And this is in play as we speak. So any reaction from here could see support at 93.90 tested. Now, do be aware that this was a previous Quasimodo resistance, so a reaction from this area is higher probability according to its structure. And with that, guys, that's it from me today. I hope we all have a productive session going forward. Thanks for your time, and I'll catch you on Monday.